charts. We had that nice move up, just like we called yesterday. And big deal is, let's take a look at the charts and everything that we look at to get an idea on what we think is going to happen a little later today. B. Wellington, what's up, man?
Oh, what's going on, Clutch? Good to be here this morning and speak with you on this lovely day. We did have a move to the upside, and what a move it was. We're still breaking these backs of these shorts. Folks that came in, and hopefully anybody that went short in this area has kind of taken their profit already because I think we're going to return back to that area. We did, kind of as we mentioned yesterday, we had to move to the upside. Came back up in here, and what you will see is we have this nice vector candle. This is on the hourly. Come up, break through on this 200, move back down. So right now it's going to be a matter of, do we hold this 200? Do we come back to the daily open? Do we come back to the 50 EMA before we move back up? So I would say, if you're trying to go long, if you think we're going to get back into this area, which we very well could, depends on what the shorts are looking like. But I think that's the area that we're going to. I got last week's high up here at 1736. I know Clutches has some other things up there that's working. But, we've got to get past. I mean, the big thing is we've got to get past 200. We've got to get past this 800. And so we have made a good move here. It's just a matter of how low will we go before we move back up. We do have this vector here at this 1549, 1550 area, which is the daily open. So it would make sense for us to tap that one more time and then try to make an attempt to the upside. If that happens, we do have a peak at kind of at 1600. So if we come back down into that daily open area, let's call that 1540s, then we have a pop. Then let's see if we can then get past the 1603. If we get past that 1603, we have the 800 EMA to deal with. But hopefully, if we get enough volume coming into that move, then that'll bring us all the way up to that 1700 area, 1715. From that standpoint. What's up, Clutch?
I'm just checking on some things here on hybrid.
You're looking for that trade, baby.
Yeah.
Market's about to open, so we should start having some activity here pretty soon. We'll move down to the 14 minute like we always do. So the 14 minutes going to pretty much tell us the same thing, before, but we're already on the 800. We've already had the 200 cross over the 50 on the 14 minute, the 800 are right there on the cross. So this would be a great time for us to move back up to the upside. If this 800 holds and create that cross, if that cross does happen, then naturally would put us back into that, that 1700 area, which would be this peak right here. We do have vectors on this side, which we could recoup that entire piece of it. If we start talking about levels, we've had a level 1 here, we had a level 2 there. So level 3 would put us again back into this area, which would be in line with, the pattern, things of that nature. So going to things like the Binance chart, we'll just look at the open interest chart real quick here first. We've 5.5 billion. If you remember yesterday, we were at 5 billion. So we put a $500 million on the books with this move here to the upside. But, if you look at it overall, especially the Binance, which is the perp market that we tend to look at, you've had this move to the upside, which has killed a lot of shorts. As you see OI on the shorter time frames kind of come back down, and you still got a lot of perp volume leading the way with spot, which is the green line here in the middle. And so I would anticipate that if spot comes up and crosses this red line here, that will probably get another move to the upside. And as you can see, this is kind of moving to the upside already. So I would anticipate us to move a little further to the upside in the short term. As far as the market is concerned, futures is positive, to flat, because we have been down. We were down yesterday. We were down on Friday, I believe. So, this move to the upside is not, ridiculous in my opinion, because we have been down so much. But we are, I would say, flat. I would even say up. I mean, we're pretty much flat as far as the markets are concerned. We looked at the economic calendar yesterday. I know Tom Barkin spoke this morning. I think, one of the things that came out of his statement, just as an excerpt that I saw, was that he thought that the market reaction to the hawkish speak was positive, meaning the drop from what the Fed was talked about in Jackson Hole, they actually appreciated that drop. And so what we have now is we have this S&P Case-Shiller U.S. Home Index year over year at 18%. So it's down from the previous 9.9, meaning home prices are coming down. Consumer confidence index is coming out a little bit later. So is job opening and quits. So around that 10 a.m., 11 a.m., which is normally when we get a little bit of volume anyway, we've got some announcements coming out on that end. So that's really all I've got on my end. What's up
That's
with
it? That's all you
that?
have? No, just
Hey
kidding.
man, I did all of my talking yesterday. I'm all talked out.
You did great. You're doing real good. You're doing real good. All right, let me know when you can see my screen here.
I do see your screen.
Okay, cool. So this is High Block Capital. I did switch over to Tier 2 just so we could actually see the whole cluster of what we got going on. Because Tier 1, man, it was kind of hard to see. But as you can see, we're down to negative $2.6 billion from negative 15 just yesterday. So they've really wiped out and really started balancing out the sheet today as normal. And as you can see, we're getting pretty even on this delta. So I'm not expecting that we're going to see just a whole lot of price action, but two areas that I really want to pay attention to. That's getting back to, we have $100 million 100x at 1505 for a long liquidation that we need to pay attention to. So if we get down to 1505 area, definitely be looking for a possible bounce there, because I think they may swing down there and grab that. And then on the upside, we have a short liquidation up here at 1721, which is just under that that high peak last week's high that you mentioned a little bit earlier. So that's just under that. So that would tell me that the breakout traders would not be getting rewarded in that area, and that they would be getting caught in a trap. So do pay attention to that key area as well. If we're so let's take a look at Bookmap and see what Bookmap has to tell us. And here's Bookmap. And I just market just opened 2 minutes ago, and as you can see, we're still slightly to the upside, but we're still hanging out here in this range that we've been in for the past couple of hours, right here at the 1570 area. So let's zoom out and see if we can get a good look on long-term liquidity, and if anything's popped up since the market opened a few minutes ago. And as you can see, folks, we have 1600 right up here. It's pretty heavy, and then we are jumping to the high side. So it looks like they are wanting to move price to higher. So I'm still bullish for the day, and I do expect that we'll probably be getting into the high 1600s and low 1700 area. That may not happen today, though. That may be more tomorrow, but I do think we're heading that direction. So as always, I'm bullish for the day. So that's what I got. That's about it.
Yeah, no, I think the market just opened. So if we're looking at what the stock market's doing, we've dropped a little bit from the 80 that we're at, but we're still pumped. We're moving to the upside. So home pricing comes in. As far as the job openings and all that stuff, we'll kind of see how it goes. But it may be a counter trend play for some of the negative news that comes out. It may be positive news relative to the jobs, but if we have positive news relative to jobs, I think it's going to be a negative from a actionable item of the Fed pivoting. Right, everybody's waiting on the Fed to pivot. If we have the more that the labor markets keep strong, labor markets are not good for inflation. Strong labor markets are not good for inflation. So the market has to taper that down. So if we, with all the data that's coming out today and this week, it may appear that the economy is doing well, and that may cause the markets to pump, or at least the narrative for the markets to pump. But ultimately, that just tells the Fed that they have more work to do which down the line later this month, when it comes out, and they do anything more than what they were supposed to do, then you're going to see a correction in the market at that point in time. So we may have a couple of good weeks of fake move to the upside before we have a downtrend after the September meeting.
I think it's going to be really interesting. The ETH 2.0 is coming out here in the near future as well. So I'm really excited to see what starts happening around that time as well.
Have you seen the meme of Vitalik?
I haven't.
Well, apparently he's a pretty special person. So if you go on crypto Twitter, it's the joke and the rave today.
I'll have to check it out a little later today. Well, that's all,
All
we
right.
have. That's all we have today, folks. So we'll see you tomorrow, same time, same place on Wednesday. Until then, be careful with your trades. Pay attention to those ranges. Again, I think it's just going to be a choppy day. So if you can get in and get a couple of scalps, good luck to you.